Welcome to the Behind the Vision podcast. In this episode with Cole, we chat on how he discovered his passion for investing, solving problems through software, and NFT horse racing. Yes, I said NFT horse racing. I hope you enjoy the show. What is a stock?
So a stock is a publicly traded, it's a piece of a company essentially. So it's publicly traded on an exchange. In like the traditional sense, it's a piece of paper that's, these days it's all digital, held in a, DTC trust or whatever. But you could theoretically order a stock certificate that has the number of shares that you own of a company. So it's equity traded on an exchange.
Dang, I didn't know you could actually buy paper. That's interesting.
Well, like back in the day, that's how they were issued, right? These days, there's companies and firms that will hold those for you technically, but I think you can still order them today if you wanted to. It takes a while. You get a little piece of paper that says your name and you own this many shares of this company. Mm-hmm. But
pretty cool. Yeah. So how can you buy stocks? Can you buy it online? Can you still do it from mailing in? I don't know.
That's a good question. The easiest way these days is through. So you have to go through a broker. So brokers are kind of your entrance into buying and selling a stock, because technically there's a trading floor, an exchange floor that all these buys and sells would happen, and obviously you're not on the floor of these exchanges. So you go through a broker, which has a presence there, and a lot of brokers these days are online, to like Robinhood, TD Ameritrade, Fidelity, all these brokerages that have been around for a while, or in Robinhood's case, not too long. They have apps and websites now that you can go on and buy stocks. So.
Sweet. We'll dive into that a little more later, but I want to kind of start back from maybe more so the beginning. What kind of kid were you like in school?
I think early on I was a little introverted, for whatever reason. This was grade school. I was never great in school, like in terms of grades and I guess aptitude for certain subjects. So I never really liked, and this is kind of even prevalent today, like when I read books, it's hard for me to get into something that I'm not interested in, like inherently. Or if I don't see the value in it long term, it's hard for me to like immerse myself. So school for me was not, it came easy in a sense where I was never failing out of classes. Smart enough, or however you want to describe it, to get by, but I never pushed really hard to excel, I guess, in a lot of areas. So.
Did you go to college?
I did for a short period of time. So I graduated high school and went to community college for 2 years, and that's actually where I first started kind of learning about investing. And then went to the U for a year, and then I got an opportunity to work for an investment firm downtown. I think my junior year of college, and I never finished. So I was going for accounting and finance in school ever since the kind of beginning years, kind of like always like analyzing companies, looking at balance sheets and income statements and things of that nature. Just kind of made sense to me. So I was like, oh, well, I'll, go for that. Like, it seems like it'd be an in-demand job, like job security, whatever. And so I went for that and dropped out to work for the investment firm. And there I was kind of just like an operations associate, essentially. So I was like processing incoming investments. And we can get into that company's business if you want to, but essentially just very entry level.
So you're doing shit you didn't want to do.
Exactly. So I obviously knew at that point, like, this is not for me. And I was making friends with other people in that business who had other roles more related to like where I would be in 5 to 10 years. Right. So like, the CFO and, accounting managers and things. And I just like their whole job was the exact same every single month. It's like reconciliations and like balancing, but all that stuff. And I was like, that's not interesting to me, especially when you're talking about for one business. I could see myself being interested in like a consulting role, or I could have seen myself, obviously these days I don't really care, but I could have seen myself more interested in like consulting role where you're going into a business and like maybe analyzing their books and coming up with some sort of outcome like of that would have been interesting, because you're working with different businesses, different industries, and that would be more interesting. But at the time I was like, this is not for me.
Yeah, not for you. You mentioned that you started to kind of dabble around in investing in college.
Mm-hmm.
What kind of started that for you?
Yeah, it's funny. Like, time goes by so fast. It's funny to think back. But we had a family friend who was doing real estate investing. So my dad ran or still does to this day, a landscaping business, and one of his clients was a person that owned a portfolio of small apartments. And I asked my dad one day, like, what does he do? Like, how does he make? Because he's just obviously a very wealthy person, and so he's like, well, he's an investor, right? He's an investor in these properties and makes this rental income. And I was like, well, what the fuck is that? Like, at the time I had no idea. And so I just started Googling like, what's an investor? And of course, when you type in Google, like investing, especially these days, like investing or, what is an investor? It usually will come up with something stock related, right? Because that's usually the most popular thing. Mm-hmm. The lowest barrier to entry is to get into like investing is to invest in an ETF or like an index fund or something like that. And so that kind of got me down a rabbit hole and got me looking at stocks in general. And then, for me, if I'm interested in something, I try to like read books about it or gain knowledge in some way like that. So I started reading books and came across, the whole kind of Warren Buffett fundamental analysis type of books, which was intriguing because in a sense, he does something similar to what I was originally going to school for, which is analyzing the business from like an income balance sheet perspective, which is, by the numbers historically, what has the company done? How have they been growing? And how can you project into the future what they should be worth today? So like discounted cash flow analysis and things of that nature. So that's really what got me started. And then from there, it's just been a journey.
Mm-hmm. What was your favorite class in college? Like, were you able to, discover that you're super interested in investing? Were you able to then match that up with your degree at all? Or?
That's a really good question. So for me, college and high school and middle school, I think elementary school, like I said, is more of an introvert. But once I started meeting people, I think for me, school was always a social thing. So it was always a way for me, like I always like going not to learn the material, but to be with friends essentially. So for me, like all the classes that I liked were some accounting related classes, of course I liked, but I really liked the classes that like they're public speaking classes where you're interacting with people more so than maybe other classes.
You like public speaking?
I don't know about like in front of a lot of people, but I do. I mean, I just like talking to people. So I think public speaking like was kind of it was nice. Important. I think it was important. I knew the value. Again, back to what I was saying. Like I knew there was value in it because I liked talking to people. So learning how to maybe speak and be confident in front of one person, let alone a ton, like that was important to me. Mm-hmm. But I always liked, philosophy too was always interesting to me. How people think and act, again, relating it back to like just like people and socializing and like learning about where people's heads are at and what they're doing and why and things of that nature. So yeah, some of those courses were more interesting.
Yeah. Did you do much investing when you were in college?
I did. Yeah. Nice. I think I bought my first stock when I was 19. What did I buy? I couldn't even remember to this day.
Bought Apple.
Yeah. No, it was, so if you want me to go down the path, like the journey of that, I definitely can. So I started out, Warren Buffett, that type of investing, which, I mean, to this day is great. I don't think that there's anything wrong with that. The market tends to be cyclical in the sense that value, which is really that style, becomes in favor in certain periods versus growth, which is kind of a period that we're in now, where, you know, when rates are low, people are willing to pay, you know, people are willing to bid up or buy stocks that are growing faster, anticipating a higher return on their money, instead of a company that's, you know, kind of growing at a steady rate but slower. So essentially seeking yield is producing kind of a growth stock being in favor. But anyway, I started out in that kind of lane, and then you know, because it's value, because you're buying stocks in theory at a discount to what you think they should be worth today, a year, 2, 5, or 10 years from now, is a very slow, like, you're not going to make money overnight, I guess is the point. And if you do, that's great, but typically you're buying and you're hoping the stock will go down so you can buy more, especially if the fundamentals don't change, and you're realizing that value over a longer time period.
It's like the most disciplined approach to investing is like Warren Buffett style, because there's a lot of stocks that can just like pop off overnight, and like that's very interesting to people, and even like what you were saying. But it's like those stocks like Starbucks and Disney that seem like they're moving a little slower, but over the long term you're able to actually value that company and invest in them, and then see the value like long term.
Totally, yeah. And I like that is a traditional investment mindset, regardless of stocks in general, right? It's like you're trying to realize value over a longer period of time, given, you know, your perspective on that investment class. And so, you know, at the time I was younger, right, and I wanted to make money quick, just like everybody when they first kind of start out. And so I basically went from that end of the spectrum to the exact opposite and started getting into like very small, like penny stocks and stuff like that, and just doing research on that. And unfortunately with penny stocks, like it's very marketed, like it's a very marketed industry, let's say, like a very small kind of part of the stock market is these penny stocks, and for various reasons. But so you search in Google how to make money in stocks or quick or whatever, you usually come across some sort of like penny stock or forum or something talking about these stocks that'll go up 100, 200% a day. And so, you know, I had no idea what I was doing back then. And even, you know, to this day I laugh because I probably started out with $1,000, and to trade in and out of a stock back then, it was, you know, $10 per trade. So you're paying $20 just to get in and out. And so to make, you know, if you're investing $1,000, like you got to make a decent return just to break even.
Yeah.
And so, you know, essentially blew up or lost that money a number of times just on, you know, I was just buying junk stocks that would go up maybe a little bit, and I would hold, and then I'd be red, you know, I'd go down and down and down and would never come back. And there's a funny story I have actually.
Never selling.
Yeah, there's a funny story I have where in my E-Trade, this is like the first broker I ever had, I bought this piece, I mean, just a piece of shit stock. Don't even know what it did, and still don't to this day. And, you know, when a stock goes down enough to where like it's basically a zero, like they'll just delist it. Like it just doesn't trade anymore. So that I think I logged into my E-Trade, I don't know, it's just a few years ago now, and you just see numbers. Like there's no name, it's nothing. It's literally, it's not a stock anymore. So it's just funny that I went down that path for, you know, a year or two.
Yeah. How much time did you know, spend learning about investing compared to actual like schoolwork, if you were to like present it out on like a pie chart or something? I
mean, I've consumed so much content regarding businesses, finance, investing, and not so much related to stocks. I mean, a large majority of it is related to stocks, but just in general, I think that's always been interesting to me. So when you put it in the context of like the traditional subjects of college or school, I mean, it's like 90-10. Like 90% of what knowledge I've tried to learn or invested time in learning has been related to that side of the world, which is kind
very
of
unfortunately. But yeah. I mean, it's very true. Like even when I was in college, I joined this kind of investment fund that would do similar trading style to Warren Buffett. And we'd go through DCF models and go through business like 10Ks, which anyone can go and find on the internet.
Yep.
And this is where you actually start to learn how a business makes money and kind of how a business operates. And that's where a lot of just business information and knowledge can come from.
Totally.
It's just like learning about investing and then also understanding how a business operates.
Dude, you're so right. And the cool thing about the regulatory process that we have here in America is within those documents, like they disclose the risk factors that they foresee. And if they're being honest, which of course they should be and usually are, that'll give you a really good idea too. Like so obviously you know how they're making money, you know that they're growing, whatever, you can do your discounted cash flows, but then you realize, or it helps you realize what the people that are actually in the business, in the industry, the experts there, what are they foreseeing as potential risks, either economic risks or, market risks. So like changes in their industry and things. So yeah, it gives you a really good idea of a business in general, and kind of how they relate to the broader economy and other businesses and other industries. It's pretty interesting.
Yeah. How did you start working for the internship that you did out of college?
I was looking for jobs, a job really. I was delivering pizzas at the time.
Ooh, nice.
Yeah, so I was a Domino's
like
delivery driver.
180.
Yeah. And so I was looking for just something a little more, that pay a little bit better, something a little more interesting, obviously maybe more related to what I was going to school for. And so I found it on Craigslist, actually. Yeah. And I didn't know what to expect, right? I just sent in my CV or my resume and
Dude, that's like the last place I think about.
I know.
Looking for jobs. It's crazy.
I know. It is kind of comical, but it fucking worked out great.
That's awesome.
It was a great experience.
So you found it on Craigslist. Did you have to apply for it? Were they just like, yeah, just come on in?
Yeah.
Hired?
Well, at the time, they were probably maybe 20 people. So it was a relatively small company. So I think I sent in my CV and I got a call and said, hey, come in at this time, we'll do an interview. And I did one interview with 3 people. I might have done a phone call first, but anyway, so it's like an initial screen, and then I did an interview with 3 people at their office downtown, and then I got a call back like a few days later. Said you'd be a great fit. We'd love to have you. So yeah, I didn't think I did really well in the interview, but I guess I did okay.
Yeah, that's cool. That's kind of like, obviously you did a lot of, investing research and just like reading on yourself, but that's kind of like, would you say that's your first step almost to pursuing an investment career?
Totally. Yeah, totally.
Yeah.
Yeah. And it was, it was an interesting business. Like, they were, I don't know if you know what life settlements are. And if you want to get into that, we can.
What is it?
It's just their business and what they did. They were raising money through like a bond offering, and they were buying life insurance policies from individuals who no longer wanted or needed them. So, in theory, if a policy was worth $1 million face value, if a person dies, whoever the beneficiary is gets $1 million. They would go to that person and say, hey, we will buy this from you today in cash for $750,000. And legally, you can do that. There's been laws that have been put into place to allow people to sell those policies. And it becomes an asset, which is interesting. Like this is, it is a very interesting business. I'm super grateful for the opportunity because it really opened my eyes to the world of finance outside of the stock market, like the investment opportunities that are available, given and there's a lot of money to be made, I will say, in assets or different asset classes that may or may not have like a larger barrier to entry or lack of information. And this is one of those asset classes. Like nobody really knows about it. There's no easy way to, like, you can't, like you or I couldn't just go on some website and buy someone's policy, right? There's no marketplace for it. There maybe is today, but back then they were the only ones doing it for the most part. So anyway, they'd buy the policy for $750,000. There was like a very complex kind of life expectancy model that they used to determine whether, if they paid the $750 and expected the person to live for 5 years, so the premiums that they pay plus the $750 would net out to less than $1 million, they would make an ROI. So anyway, that was their whole business model, and raising money to buy these life insurance policies, and then any proceeds they'd make, the company would keep. And so it was very kind of interesting opportunity to start out with.
Yeah, dude, that sounds like an insane business.
Totally.
Buying life insurance policies.
Totally. Dude, it's just crazy what you can, like, out there. There's people doing everything.
For sure.
People doing everything.
For sure. Even when you travel other parts of the world. I remember when we were in California with Devin Winter, and we were just out there, and you go to this apartment building, and there's these kids there that are younger. All of them are younger than us. They're like in their 18 to 20 years old, and some of them had shoe businesses where they're just reselling, and there's a few of them that were reselling like Instagram page, like meme accounts. they're doing that full time.
That's
it's
awesome.
Like, it's crazy. It's cool though.
Yeah, dude, it's just hustling, right? Mm-hmm. Like anything you can do to make money. I love it. I mean, it's cool.
Yeah. So after the internship, because you left college for the internship, right?
Yeah, it wasn't technically an internship. Like it was an actual job. Like I was getting paid.
Yeah.
And at the time I thought it was a lot of money. So I left because it was full time. I mean, essentially. And
was it hard for you to leave college?
Not at all. Looking back, I kind of regret it. I think at the time I think there's a general consensus amongst friends, family, whatever. It's like you need to go to school, and like you need a degree, you need to do this. And I've never been a person, even to this day, if someone tells me I need to do something or I have to do something, I am a huge contrarian to that point of view. Like I just don't think that there's there's not a lot of black and white in the world, right? I think. So I always thinking back, kind of that pushed me away from staying. Like, well, fuck off. Like I know I can do whatever I want.
Is that a challenge?
Yeah, exactly. So I think that was easy for me at the time. Looking back, I think there is a lot of value in college, not so much for the material that you learn or the knowledge you gain from specific classes, but the networking aspect, the social aspect. Again, like just the social part of everything is important to me. So I think that there's a lot of value in school. Whether that value is equal to the amount that some people pay for certain schools, I don't know. But looking back, I probably could have stayed and would have been just fine. Like the opportunity that I got, it was very interesting. It obviously got me to where I am today, but it wasn't like a once in a lifetime opportunity. So
yeah. Do you think it would give you the same outcome if you would have stayed in school?
It's a really good question. Part of me thinks that I want to say that if I did stay, I would have gotten a traditional job and probably hated my life. But that also could be, me in hindsight bias as an excuse to make it seem like it was okay to leave. So I don't really know. If it would have helped me out or maybe propelled me a little further than I am now, I have no idea. It's a good question.
Yeah.
Yeah.
So after the internship, what did you do after that? Did you get fired? Did you leave?
Yeah, it's been a wild ride. So when I was there, there was my job was very monotonous. It was very routine. And for good reason. Like it's a very entry level job, right? So like they're not going to give me a lot of responsibility when I'm that low on the totem pole. So I started dabbling. I don't even know how I started, but I started dabbling with like coding, like programming, some Excel sheets that I was in every day just to automate a lot of the stuff that I was doing. And I fell in love with that actually, and kind of dove into that. And so essentially I was doing nothing like every day, like relatively speaking, like I wasn't doing like a lot of the stuff that I was kind of manually point and click doing or like typing in or whatever was all automated. And so after a while, I kind of just made the decision to pursue that as career, you could say, or get a job in that field. One, because I saw the value that I created just by automating that and the time that I saved. So I was like, wow, like programming, it was big back then. I mean, not like it wasn't like I was on the forefront of anything, but like I was like, wow, this is going to be huge. Like programming or learning how to code is getting easier for people. Like the barrier to entry is easy, so I can learn it because I'm not, the smartest person in the world. And the value to businesses is huge. So I was like, well, and I liked it. It's very logical. It's very, mathematical in a sense. So I kind of dove into that. I got a job. So I left that business. I quit the investment firm and got a job with a news media business in Bloomington, just as a entry-level programmer. And so I started out, they had a huge CI/CD initiative, which is basically like continuous integration and deployment. So you automate the build and the deployment of applications to, in their case, they were doing it to like actual servers on site and things of that nature. But that was the first project I was ever officially on in my career as a programmer.
Yeah, that's cool.
Yeah.
How did you learn your programming knowledge?
Yeah, it was all, a lot of trial and error, like a lot of just banging my head against the wall, which I think is the best way to learn, at least for me. And then just, online books. Like I didn't go to any classes or anything for computer science or programming or whatsoever. So it was really just, and like for me, learning with an actual application, like not application like a app, but like the actual application of some sort of program to a business. So for me, it was like I was easily able to understand how that specific like piece of code was working to solve a specific need, which made a lot of sense to me. So I think it was easier for me. Like my learning curve was quicker because I saw, like I wasn't trying to come up with apps in my head and like code them from scratch. Like I had real business use case for specific things. So I was like, okay, I know exactly the outcome I need. Like how do I code it? So it was like kind of half the problem was already there. It's like solved.
Do you find that it was more beneficial for you to know that there was already a problem for you to fix?
Yes.
Or did you find it do you see it beneficial to also just think of kind of a random idea and try to create something like that?
Yeah, see, that I think is a good question, because back then it was easier for me to work backwards. Like I had the solution, I had the objective, the goal that I wanted to achieve. So it's like working backwards and figuring out like, okay, how do I code for that? But I think, once you get to a certain point, like once you kind of have a foundation, exploring other options would be, exploring kind of, there we go, I got video. No, just exploring, once you have a foundation, you kind of know what you're doing, then having the kind of open canvas, if you will, to code maybe something you're not sure of, like what the final outcome is, might be pretty beneficial because you could explore other avenues that you might not have taken before. So, yeah, I don't know.
Yeah, what was the first thing you built through your second language?
Yeah. So I automated, so this is actually kind of fucked up, but part of my role was to search the obituaries. You're talking about at that company, right? Search the obituaries for the people that we had in our portfolio, right? So the people that we bought these life insurance policies from. I was to go through, and there was a number of means that we had to search for the deaths, right? So we could recoup that face value of that life insurance policy. But one of the avenues was me going through obituaries, because typically those would be immediate, right? Like if someone dies, their family posts out the obituary and says when the service will be or whatever. Mm-hmm. So my job was to just go through and search people's names and try and match up their full name with their date of birth, because that's usually all they provide in an obituary, right? It's like their full name and when they were born and when they died. So I was just going through websites, just searching for these people to see if we could find one that we would be able to realize that gain on. Because the longer you let that sit, the more premium we pay, the lower the ROI is on that investment. So anyway, the code that I built was, I created a spreadsheet that had people's full names and date of birth in it, in our portfolio, and it would just run line by line, copy the name and the date of birth, open up a browser automatically, go to the website that I wanted to, and pop in the name and the date of birth, and it would search through each post to see if there was a match. And if there was a match, it would just, throw a notification out there, and then I would have to obviously go in and make sure that it was legit. And so that thing would just run, and again, that would normally take me like a full day.
Because you're doing that
manually going through, and I'm typing in their name, and I'm going through. This thing would do it in like a couple hours, and I wouldn't have to be there. So not only was the time that it took to get the results quicker, but it was not my time that it was doing it.
Did you still have to stay there though?
Initially, yeah, because it was clunky. Like, it was my first project, right? So it was like not working, or bomb out, or like, if I searched a name and nothing came up, it wouldn't know what to do. So there's things that I had to work through, right? But at the end, it was just a self-sufficient process. Like, it would just run. I'd fire it up every Monday or whatever whatever the hell it was, and
So you really built software for the company.
Yeah, definitely.
Did they ask you to do that? Did
No,
you
it was
just
all on my own.
Wow.
All on my own, because I realized, like, this sucks. I don't want, and I just knew, like, I didn't have to. Like, I knew there was a way to automate it. Just in my head, I just, or generally in life, I just think, like, there's always a better way to do something, right?
Yeah.
So it's just kind of that drive to, like, figure it out.
Did you tell them that you built them software?
After the fact, yeah.
Wait, when you left?
No.
Oh.
After I did it and, like, it worked, I was like, okay, maybe I should tell somebody I'm doing this, because I wasn't gonna be the person that, did it and then just kind of like fucked off for the whole workday. Like, I mean, I was very open about it, and they were on board with it. I mean, they loved it.
So they're completely cool with like what you created.
Yeah, and to their credit, like, everyone that I met there, and I still keep in touch with some of the people I met there to this day. I consider them good friends of mine. So very open people, very nice people, like, professionally. Just very good management. I think they were all open to great ideas. But I mean, when you think about it, like, it was just an investment firm that, like, they were just investing in life insurance. Like, it wasn't like a super regulated or kind of typical professional environment. Like, it's not like a law firm where there's, it's kind of a
pretty stiff.
Yeah, exactly. It was very laid back, and they never had to wear like a tie, shit like that. So
oh, that's awesome though.
Yeah. It was very, very laid back.
That's cool. So how long did you work there for?
The investment firm was almost 2 years, I think. Yeah, 2 years or so. And then I was at the news media business for a year.
Okay.
And then after that, I went to start a essentially software development consultancy with a couple other people.
Software consultancy?
Yeah, specific to Salesforce. So we're doing a lot of like Salesforce implementation and customization.
How did that idea come about?
I don't know. It was people that I had met at the investment firm so long story short, the investment firm started using Salesforce, and people, if they don't know what Salesforce, there's a lot of ability to customize it via code. And they knew that I was doing that now full time at the media company. So they're like, hey, we want to start this little business. Do you want to come be our developer lead for projects that may need some customization? And I was like, sure. At the time I was like, I really want to do something different, and I saw it as a huge opportunity. So we did that for about a year and a half and had, some relative success with that. And then after all the leads that we had from our immediate networks kind of dried up and we wrapped up those projects, nobody really wanted to do any business development to get new projects. Like, at the time I wasn't comfortable with that. We didn't really have a solid track record to present to people, and we didn't really have the resources to pursue like, any major deals. So it's kind of like, yeah, we could do business development and maybe get some like really small projects, but no one really wanted to take the lead on that. So we ended up dissolving that, you could say. And each of us went our own respective ways in consulting after that.
Yeah. What was your biggest like takeaway from that experience?
It's a good question. I would say that, I mean, ultimately I loved the experience. Like I loved kind of being not an owner. Like I didn't own any IP or anything like that. There wasn't anything that I owned. I didn't have equity in the business, but like, being part of something that was mine in a sense was cool. Like that was kind of an eye opener. I was like, wow, I could really do this for a living, if you will, like working for myself. And also kind of the way that it dissolved, like just realizing that when it comes to running a business, you are really, you may have a really good skill set at one thing and you may be okay at others, but the way that you become successful, like really successful in any business venture, in my opinion, is either utilizing other people as resources for information or bringing them in to help you out if they're really good at one thing. So like, for example, if we would have found somebody, or we probably should have, but we didn't, find like a really good sales rep that could like build a book of business for us, like projects in the pipeline, I think we would have been very successful. But nobody wanted to do that. Nobody felt like they could. And so that's why ultimately the business folded. So I think just realizing that everyone has a different skill set and aptitude for certain things, and you really have to be willing and open to tapping into that, asking for help when you need it, and not being kind of like stubborn about it. So
Yeah. What did you end up doing after that experience for the startup?
So then that's when I just started consulting for the most part, up until, today, I guess. I still kind of do, like, as a little bit of it.
Does that kind of bring us where you are in your life today?
Yeah, pretty much. The past, like, I'd say 6 years, let's see, 6-7 years or so, I've just been consulting. So originally I started out working for a consulting business. So think like Deloitte, like some of those bigger names. I wasn't working for any of the big four, but I was working for like a boutique. So similar concept, but I was just a consultant. Like I'd be on different projects, working in different businesses and helping them out. And so I've done a combination of that over the years, as well as just my own practice, if you will. Just like,
yeah. What are you specifically consulting on?
So I've done a couple different things. A lot of Salesforce over the years. So whether it's implementation, customization for Salesforce, it's been a very hot product. A lot of businesses use it and it's growing. It's just been going like crazy. So I've stuck to doing a lot of that. I've done small projects, app development, like for iPhone and iOS, or iOS and Android. Some web stuff, like web apps. But yeah, majority, like Salesforce has just been super hot. So I've kind of stuck with it. The hourly rates you can get are pretty high, because for the most part you're talking about enterprise businesses, established businesses that have R&D, or like have money to spend on technology. So they're willing to pay someone instead of hiring in-house, right? So as a consultant, you go in, they have objectives, they have goals, they have the budget, and you just kind of work with their teams to develop what they need and implement what they need.
Okay, a lot on the development side?
Yeah.
Okay.
A lot of on the development side originally, and these days I'm mostly a higher level, what they like would call like kind of an architect. So, going into a business and working with maybe more upper management individuals to either identify their goals and objectives or help them to uncover what's possible given their goals. So like, for example, they want to decrease the sales cycle, the time it takes to complete a sale within a business. Using Salesforce, they want to reduce that time by 50% or something like that. So I can go in and say, okay, if you want to do that using Salesforce, you can automate this, and this. You can integrate with DocuSign and send out the contracts automatically. Things of that nature is kind of what I'm doing now, and less actual programming.
Yeah. What's been the most challenging project in the consultancy world that you've had to deal with so far?
So there's two. This is a really good question. There's two kind of right. So I had two different avenues, right? So the one answer to this question is complexity, which would be like the actual development is like hard. It's a hard problem to solve. So for example, I was on a project that they wanted to run through every contact record they had in Salesforce and pull in a bunch of related object data, aggregate all of that, and spit it out on a PDF as like a document. And so from a development standpoint, the actual like generation of a PDF and displaying data is not hard, but they wanted to scale that process to 10,000 contact records. And those 10,000 contact records would potentially have like 10 or more related records to it. So you're talking about scaling a very easy solution to, 100,000 records, which if you want to do that automatically without anything going wrong, like it's a hard problem to solve programmatically, like speaking. So I think that project was difficult and helped me learn like a lot about scalability with code and how you think about scaling a solution and what needs to happen and when to make sure it works, one, properly as you're expecting, and two, in an efficient like time manner. And then the other aspect is I was on a project that was like a huge dollar size at the time. I think it was like $3 or $4 million for the business I was working at. And it was difficult because there were multiple, not only people within our company working on the project, but like other firms were involved. So like sometimes if a business has a large scale project, they'll approach multiple smaller firms to help with that project. So it's like a large scale program. The reason for that is different firms may have like different specialties. So this company said, we're going to invest all this money right now. We want to get it all done at the same time. So we're working on one part of the project that integrates or works with kind of another firm's part of the project, if that makes sense. So it's like trying to balance everyone's and like work with other teams that aren't even in your business. Like that was just very hard. That was
like cross
collaboration, and like in anything, like you're only as strong as your weakest link. So if you have like a firm that's not pulling their weight, like what do you do? Right? They don't work for you. So how do you work with them on a professional level to try and figure it out? So it was kind of a nightmare, honestly. Like looking back, it was stressful.
Yeah.
It was stressful because we had deadlines, and this company was, they're spending, let's say $5 million in a year on a project. Like they're on top of it. Like, I mean, they weren't the biggest company in the world. So like $5 million to them was a big investment. So they were on it. Like they wanted us to hit our deadlines. And so, working with everyone, trying to figure it out and hit those targets was stressful.
Yeah, that'd been super intense. Dang. What does an average day look like in your life right now?
So I get up, I'll eat a Quest bar.
And then have some Quest chips.
No, I'm usually up, 7:30 or so. Depending on, what I did the night before or whatever. And then I'm at, up basically for the last 2 years or 2.5. I'm at WeWork before 8. And I'm, usually there. I'll, be there for the market open, check emails, whether for consulting clients or whatever, or personal emails, things I'm trying to, deals. Like if I get any angel deals sent to my personal email, I'll check those out. And then I'm usually,
what are angel deals?
Oh yeah, that's a whole thing we can get into too. So like 2 or 3 years ago, I started doing some angel investing. So it's like, a private, me, not an entity, essentially making investments in deals, that are private. So like it's a private company. It's not public. and they're, raising money via a round, and usually it's, the valuations of the company are, anywhere from $1 million to maybe 10, 15 million, depending on, what stage they're in. But I think 2 years ago, so when I became accredited, so there's an accreditation that essentially says that you make enough money to invest in these more risky deals. So it's kind of a bunch of BS, and it's just such an arbitrary number that you have to hit to be considered a sophisticated investor. When in reality, I think there could be a course out there that the SEC or some government agency puts out that enlightens people with the risks associated to these things, and they should be able to do these deals too, because some of the biggest returns have come from private companies, right? Getting in early on these private deals. Anyway, so I became part of a
checking the emails.
Yeah.
Angel fund emails.
Yep. So that's angel investing.
Yeah.
Essentially.
Yes.
We'll
dive into that a little bit after,
if you want to come back to
disrupt
that. Totally.
The flow.
So that's, if anywhere from 8:30 to 10, I'm usually doing that stuff. So I'm watching, anything that's going on in the markets, and, keeping tabs on any other investments I have, whether they're public or private deals. And then I usually try and take a walk, especially in the summer. So I'll go for, a walk, usually maybe a half hour to 45 minutes, just around the North Loop, down to the river. Sometimes I'll go across over to Boom Island and come back, and usually listen to podcasts or sometimes music, depending on the mood that I'm in. And then since I don't really eat breakfast, since I haven't really talked about breakfast yet, I will be back and usually eat an early breakfast or early lunch, I guess you could say, 11 o'clock, 11:30.
How many bags of Quest chips?
So my diet is interesting. As you guys know in the office, I do the keto thing, right?
I didn't know. I don't know anything about your diet.
Yeah,
no.
So I do the keto. I've been doing that for 7 years.
Dang.
So I'm just very low carb. I'm not super strict about it, but I'm usually eating less than 40 grams of carbs a day.
Okay. What's kind of your reasoning behind it?
Yeah, so when I first heard about it, I was just kind of I've always been someone to tinker with things whether it be body hacking, I guess you could call it. So alpha brain and just shit like that, testing different supplements and see how I react, and obviously THC and CBD, all this stuff. I've always been interested in just kind of supplements and things that you can do, diet or otherwise, that change your performance or your mood, or stabilize your mood, I guess, and sleep, and just things that you can do to really just increase your overall well-being. And so I had heard about keto through might even have been Tim Ferriss, just his podcast, and I was kind of I'll check it out. It seems interesting. I did some research first, and I think it's just generally known that most people, or at least Americans, eat a lot of carbs or too much sugar. And so I was kind of all right, well, I can I originally was kind of just dipping my toe in and wasn't really seeing any results, I guess you could say. And so I was well, let's just dive headfirst into this. I mean, buy the book Keto, where you're eating less than 30 grams of carbs a day, and you have specific macros you have to hit for the amount of protein you can eat, because that can affect it. Can't have too much, and also the amount of fat that you need to get, specific ratio. So I kind of dove in and started that, and I was testing my blood, pricking my fingers, checking my ketone levels and stuff like that. So I dove into it and I was just tracking. It was just interesting to me to track it, and how if I ate certain things, how did my body react? How did my insulin levels change, and all that stuff, and the amount of glucose and all the stuff that kind of relates to how your body processes carbohydrates or sugar, and breaks it down into energy. And I thought it was super interesting, and I ultimately felt way better, more energized consistently throughout the day. So instead of needing and feeling I was crashing at 2 p.m. or 3 p.m. and needing a Red Bull or a cup of coffee or something, I I felt like the same level of energy throughout the entire day, and I slept way better. And so after, I mean, it's just kind of been 7 years. I was like, well, why would I change anything at this point? You know, it's been working for me. So
Yeah.
yeah,
If it definitely works, just keep going at it.
totally.
Sure.
And yeah, I would say it's been a big, it's had a huge impact on my overall mood. And, you know, if you sleep better, obviously that, you know, it kind of helped my sleep, which sleep is, I think, a huge, like very important to your overall happiness and mental health, and energy and everything. So
You keep your afternoons pretty flexible, probably more flexible than your mornings.
totally. Yeah, my mornings are very I mean, like for someone who doesn't have like super consistent scheduling, like my mornings are pretty consistent. Like I always get up at the same time. We kind of talked about me like taking some time in the morning now to not like be on my phone. So like that I'm trying to incorporate, but for the most part, it is super consistent that I'm up at relatively the same time. I have, you know, specific things that I'm looking at in the morning, information that I'm, you know, ingesting, and then afternoons are very open for sure.
Yeah. Is there anything you specifically try to do in the afternoon, or do you usually just keep it open to whatever you want to do?
Yeah, I mean, so I would say the gym is important. I mean, like I've been historically been pretty good at going to the gym. So, you know, it's easy to go for me in the winter, right? There's not a whole lot going on, I guess you could say. So like, you know, you're not wanting to be outside as much in the winter, obviously. So for me to go in the winter, it's a little bit easier. You know, there's not always like, for example, today I'm going to go golf, you know, after this. So like where I would probably go to the gym, I'm going to go golf instead, which is fine by me. Like I just want to be active and be outside and, you know, walk 18 or 9 or whatever. But so that's important to get some sort of exercise, which usually happens for me in the afternoons. And then, yeah, like walking too. So I'll usually go on an afternoon walk as well. And it's usually not as long, but I don't know. I just find walking really, for me, it's not really an exercise thing. It's more of like a, kind of like a mental thing. Like I just like walking, and for whatever reason, it helps me like process information or think about plans or whatever. Like I just kind of, it's an easy way for me. I'm not just sitting there. I'm kind of actively moving and like listening and to like podcasts or whatever. So that is usually something that happens in the afternoon, and then it just keep it open for, you know, whatever, happy hour, social activities, you know, boating, golf in the summer, you know, seeing family, whatever.
Yeah. What's your favorite thing to do in the summer?
I mean, last summer, so what's funny is last summer I golfed, I think I golfed, let's see, so probably golfed like 50 rounds of golf, which for me was a lot.
Yeah.
Like and it still is, because the funny part is this summer I've golfed maybe 7, if that. So last year I would have said golf for sure, and I love golf, and I still do, and like I am going today. So that's one activity I really like to do in the summer. This summer I did a lot. I mean, I boated a lot, like, you know, so that kind of took over maybe more of the afternoon than golf. But
do you find golf to be like, what kind of value do you want to get out of it specifically? Is it something to help you relax and get your mind off of work? Do you actually go and golf to hopefully like network with people?
I think it's a little bit of both. I think golf, like for me, I'm not the best golfer at all. Like, yeah, I probably shoot in like the high 80s on a good day, maybe mid 80s. So I'm not like a crazy good golfer. I'm not playing in any major tournaments or something like that, locally. But I will say that it is a very cool social. There's a social aspect to it for me too. So I love getting like, you know, four dudes together, 4 gals or whatever together, and just going out and having a good time. You're outside, you know, you maybe have a couple beers or something like that, and you shooting the shit. And then, you know, it is a cool way to clear your head. Like if you're playing well, it's fun to be out there, and it's fun to kind of, take your mind off of things and focus on just hitting the next good shot, right?
Yeah, and if you're not playing well, you just want to like leave.
Yeah,
break your club.
yeah. I mean, just like most things, it's a love-hate relationship, right? Like if you have a 9 to 5, there's shit that you love doing throughout the day, and there's shit that you hate. In terms of like the markets, and like if you're into the stock market, it's a love-hate thing. Like,
yes,
you're on a run, you're not doing so hot sometimes. So
for sure. How did you get introduced to the world of angel investing? And would you be able to maybe share a little bit on what angel investing is?
Yeah.
More specifics?
Totally. So how did I get introduced to angel investing? I listened to a podcast called This Week in Startups. So it's by Jason Calacanis, a pretty, I guess, famous person these days in terms of an angel investor. So he's, early on in Uber and some other companies. So, but his podcast was focused just around, and to this day he still runs it, is just bringing on founders of startups and just talking about their business and, their struggles and how they've been able to succeed. And I think he kind of used that originally as deal flow. So he was able to kind of market himself as a person who's communicating with a lot of founders, and so that he was getting a lot of deal flow and did a lot of angel investments, I'm sure, because of those relationships. So followed him through that process, and he wrote a book about angel investing, just kind of what he went through and some of the things he's learned. And so I read that and was just super interested. I mean, at this point, I was already interested in investing in stocks and companies in general. And so it was kind of like a good, just kind of a segue into that, earlier stage market. And since I had, became accredited, which I was able to be in some of these deals. So I joined, he has a syndicate. So a syndicate in the angel investing world is essentially a collection of people like myself. So just like small angel investors looking to invest, anywhere from 2 to 20 grand in a deal. And the syndicate lead, which in this case is this Jason Calacanis, would source the deals and do the due diligence, make sure that the company is legit, not fraudulent in any way, shape, or form, not misreporting any of their revenues or their expenses and et cetera. And so he'll put the deal out, he'll negotiate terms with the company, and he'll say, hey, we have a $5 million allocation to this deal. It's a Series A or it's a seed deal, and the company's, this is the terms. They're raising a total of X amount of dollars at this valuation, and as the syndicate lead, I'm going to take a carry, which is essentially so there's a management fee, kind of setup fee, and then there's a carry, which essentially means that he gets a certain percentage of any profits that are generated from this particular deal.
Yeah, he's kind of getting a little kickback for presenting the deal to
Exactly.
you.
It's a finder's fee, essentially. It's beneficial for him because that incentivizes him to find good deals, right? Because he's getting a percentage of any profit, so that usually means an exit. So if a company gets acquired, that's when he would receive his 10, 15, 20%, whatever it is. So he's incentivized to find good deals and make the valuation and negotiate a good valuation for our investment. And obviously for us, that's great because, it's not like you're paying him 10, 15% right out the door. It's just upon your successful exit from that business, he takes his share out of your proceeds, and that's that. And so, that's how I kind of got into it. And I was looking at these deals through the syndicate. He would send, a couple a month. And I would look at him. I was looking at him for a little while, wasn't pulling any of the triggers, and then, just started investing pretty small amounts into some of these, really the lowest I could, which was $1,000 or $2,000. Originally started out just because I really didn't know what I was doing. I didn't understand, cap structures and how, pro rata works. So there's company will, most of the deals that I would be doing are seed or Series A. They're really early on, so they're raising a relatively small amount of money at a small valuation to accelerate, their growth and get to the next stage. And when they get to a next stage, usually they'll raise more, right? Their fundamentals change, maybe their growth rate is increasing, they want to push even harder. So they'll go and they'll raise even more money at an even higher valuation. And so, there's terms like pro rata and some of the rights that you get as an investor, and things that you need to understand before you go into some of these deals, because it will ultimately make a big difference on your outcome, money wise, profit wise. Mm-hmm.
So what you're investing in is kind of a big fund that other investors are also putting money in. And was it a syndication, or what was the?
Yeah, is
that what it is?
Yeah, it's a syndicate, which is essentially syndicating, money for this deal. It's it's essentially an LLC. So it's basically like I'm investing in an entity, an SPV, or some sort of like entity structure that, and my investment along with everyone else's is divided out based upon the amount that we invest, and that entity is the sole entity on the cap table for that investment round. So, and it's just kind of like a layer in between all of the individuals that are investing in the deal. There's just that layer in there. So that way the company only has one person or entity to report to, essentially, which is the syndicate lead. But yet we all have our equal share of the investment. So, if it's a $1 million round and I'm investing $100,000, you can do the math and figure out, what the percentages would be based upon your investment and the round size or the allocation size that syndicate entity has.
Did you discover the fund through his book or his podcast?
Yeah.
Both, kind of?
Yeah. So he mentions it in his podcast a lot. Because obviously it's good for him and it's good for, the startup market for there to be liquidity and capital that wants to invest in these deals. So, it's something that he markets because the more, theoretically, the more investors he has as part of the syndicate, the more money he can generate from his syndicate members, so i.e. me, and the more deals he can do, or the more the better terms you can negotiate, the more amount of money that you can put towards specific deals, which usually gives you better terms and some negotiating power and things like that. So, yeah, it's good for him. It's good for me because I don't have to invest, or at least it has been up until now, because I don't have to invest, $25,000 or $50,000 into a deal. I can do one or two, or at least I could do. I've been doing more now, but like one or two into a deal and just kind of like see how it goes. What are some of the industries and some of the types of businesses that I'm interested in? For one, because I didn't know. Two, like what types of updates do you get? Like how do you know when you should be doubling down? Like when do you get to double down? Just the things like you would learn over time. So it's been nice to kind of dip my toe in up until the last couple of years.
Yeah, for sure. No, that's cool. Was the kind of the onboarding or being able to enter that fund, was that process difficult for you to join?
Not at all. It was really just, your personal information as far as taxation is concerned, right? So social, stuff like that. And then really it's just being accredited. So, if you're trying to invest, if any U.S. person is trying to invest in like a private deal, something that's not publicly traded that the SEC has control over, then, they make sure that you're accredited, which means that you're sophisticated enough to invest your money into some of these deals that are, perceived to be more risky by the SEC or by, a lot of regulatory bodies. So,
where can you go to get accredited?
It's not somewhere you need to go. It's first, a lot of deals, it's basically self-proclaimed. But obviously, if you were not accredited, and I actually don't know what would happen if you got into a deal and weren't accredited but said you were. I don't know what the ramifications would be of that.
Okay. So
However, it's self-proclaimed. It's essentially, as far as to date, it's $1 million in assets, excluding your home, I believe, and or 200 grand in annual income,
okay.
individual, and I think there's one for couples as well. So if on your taxes, if your your income's over 200 grand, you qualify, or if you have $1 million in assets, excluding your home, you're technically accredited. And again, it's self-proclaimed. Like, there are deals that I've been in, or potential deals that I've been pitched, where sometimes they'll do due diligence to determine, and like you have to produce some sort of documentation, whether it be a tax return or a brokerage statement, let's say, that has over $1 million in equity in it, and produce that to them so that they're comfortable with having you invest. But yeah, for this syndicate, that was not needed.
Okay. Are there any current industries that you're really looking at in terms of investing in?
I can tell you what I have done. So like, I really like SaaS businesses. Like, for me, like, software as a service makes a lot of sense. That's what I've done a lot of consulting in, right? Like with Salesforce and other products. So like, those businesses make sense to me. I understand, the R&D costs, and then how they're marketed, and how like their recurring revenue can kind of look and be projected and forecasted and things of that nature. So those businesses are deals that I'll usually invest in if I like the product and the founder. I won't really touch anything that's not a business based in the United States. So if it does a lot of business or has a founder that's not from here, if the market is if their total addressable market is generally not in the United States, I just won't touch it, because I don't know, cultural trends. I don't understand, especially if it's like a physical product that they're trying to, market to or sell into, LATAM or something like that. Like, I'm just not familiar with how popular is that going to be, what the culture is like. Are they, is this product going to be perceived as really valuable to them, et cetera, et cetera. So if it's, ex-US, I probably won't do the deal. The only caveat to that is there has been one deal that was LATAM, where the founder I was familiar with, don't know the guy, but familiar with someone who had built another business and sold it. So it's kind of like, all right, well, he knows what he's doing to some degree, has some experience like building a business and selling it, which obviously is what you're looking for. And I was, so I'm part of more than one syndicate now. I guess I should probably say that as well. So
is it underneath the same guy or different?
Different.
Okay.
Yeah. So this particular deal was pitched by another syndicate lead who I'm familiar with, and has a very good track record and kind of knows a lot about different industries, and a very smart person. So I did that deal ultimately because I trusted the syndicate lead, and then obviously the founder of the business, regardless of what I thought the actual business and market would be able, if it was going to be successful or not. But as far as industries, like the industry itself doesn't matter, but the types of businesses do. So like SaaS is, I like SaaS. Like a physical product business, I will invest in. So if it's like a direct to consumer brand or something like that, I will do the deal if the valuation's good and that I like the product and would buy it myself. But generally, like D2C brands where there's like physical products involved, especially if it's like a breakthrough product that like requires a lot of R&D or like spend, or you generally shy away from those, just because those businesses are hard. Like anyone will probably tell you, if you're trying to develop a product, like a physical product that's new, or like that's heavily like requires some sort of.
If you get into development of the product?
Yeah, if you're talking like something that's like a new concept is, I guess what I'm trying to say. If it's like a new physical product that's a new concept to people, I think it's hard. And I think the opportunity is huge, right? It's probably, you're unlocking a lot of, there's a lot of opportunity there if you can basically create your own market for a product that you're coming up with. But obviously the risk is huge. So I'm not really looking to be part of like anything earth shattering, or like, I'm not like reinventing the wheel, or, coming up with the next sliced bread, really. I'm just looking to invest in deals that I feel have a greater chance of success, from my perspective.
What's been your biggest like win in the investment world, and then what's been your biggest loss?
For public or private companies? So stocks related or angel investing? Or both?
Do both. Yeah,
okay.
Let's do both.
So for the angel investing world, since I started only, let's say 3 years ago, I haven't had any liquid exits. So like, the typical time frame for like an angel investment is like 7 to 10 years before you get any like real cash return. That can of course be different for different industries and types of businesses, but that's like the general time frame that people will say. And so since I haven't really hit even the beginning stage of that, I haven't had any I haven't received any proceeds in cash from any deal. I have had a pretty good majority of my deals get marked up, which means they raised more money at a higher valuation. And I've done a couple of pro ratas. I've taken advantage of that, which essentially means that I can invest. I am guaranteed to be able to invest in that next round at that valuation. So it basically locks in it locks in the percentage of ownership that you have, which is a good thing if you believe in the company, right? Because you could theoretically get diluted into the point where you really have nothing, which is fine if the company keeps growing, goes public. But if it goes, kind of nowhere, then you might be kind of SOL. But anyway, so I've had a number of deals marked up. I've had a number of deals. I've gotten been some interesting like cap table changes. So there's one that I was in that, let's see, how did this work out? So it raised, and then my equity got converted because there's something that happened where they raised more money, and the specific way that they raised it triggered, based on my note that I had originally, triggered a clause essentially that was similar to it being an exit, if you will. So I got a different form of equity. I got preferred shares in that, which I believe carry an interest rate, if I'm not mistaken. So that's kind of nice. So I might be seeing some actual cash flow from that investment. Trying to think of, there's one deal that pivoted. So essentially the initial business idea was completely failed, and they pivoted into a new business. And so I essentially that was a zero. And then in terms of public markets, biggest win, I'm trying to think. I mean, like last year was pretty wild for a lot of people that were investing, especially if you were, willing to buy the fear last March. So I was buying like, any tech name in March and April pretty aggressively, especially more so ones related to work from home. So like Zoom, I think I bought it for like $90. So there was some like DocuSign, like, if you were buying any work from home, you could have been buying every month or every every paycheck you got, and buying any tech name, and then more specifically anything that was kind of like the work from home stocks. Your success rate would have been huge if you were just buying those last year and holding them. But so those were some big wins last year. I'm trying to think of my worst loss. I think I got caught. I was trading some. I think I got caught one day and this was purely purely just a mistake. I think I threw in an order on a leveraged ETF product that is a great product. It's just leveraged, right? So you need to know what you're doing. And I did. It was not like I was making a mistake in my thinking. It was more my fingers put in an order for a share amount.
What are you doing?
That was way too big, and I got smoked on that pretty bad. Mm-hmm. Yeah, that was 5 figures that I threw down the toilet pretty quick. Okay. But yeah, so I don't know.
Yeah, interesting. What's the current brand in the world that is maybe most well known that you've invested in? Because I know you've invested in like Mudwater. Oh yeah, right. And that one's a really cool brand.
Yeah, it's all relative.
Yeah.
Mudwater I have, and so I think that is seen by a lot of people, especially on like Instagram. They're pretty good at Instagram ads. I'm trying to think of what else. There's a company called Outlaw Soaps. I guess it's super popular. I haven't ever used it. I really wanted to. So usually I'll buy the product, like Mudwater, for example, right? You know that I have it in the office, and like I didn't know exactly what it was. I'd seen it on Instagram, and I got pitched the deal, and I was like, well, okay, I'll invest a little bit in this because I like the concept. And then I ordered it, and I loved it. So I even invested more, I think, after that because I liked it. But this Outlaw Soap supposedly is just growing like crazy. I don't know of anyone that has the product. If someone does, like your followers, like let me know. Like I should probably get it. But supposedly it's super popular in like more rural areas because the concept behind it is scents, like soap scents that are a little more, not your traditional scents. So think like tobacco and like more
talking about like
kind of like more
scents,
just like weird stuff.
Okay,
just like more unique scents that's not your traditional cologne smell, whatever you want to call it. But supposedly it's like super popular, and I should probably order some sometime soon, but I haven't yet.
Yeah, if you can find a scent you want.
Totally. Yeah, totally.
When looking to invest into those companies, is there one thing that you really look for? Or even if you were to maybe pull out one specific thing that needs to be like a yes from you in order for you to invest in?
Well, I think like the founder is important. So, a lot of the deals that we'll get, and I say pitch to me, I mean like they're presented to the syndicate in the cases where the syndicate is involved, where they will discuss or at least highlight what the founder, who he is and what they've done, or the founding team, right? Like if there's an executive kind of level of individuals, they'll discuss where they came from. Usually they have like prior successes in other businesses and things. So I always look at that. I'm interested to see, are they successful in this industry or in this vertical of business? Like if they were like the director of marketing for Uber and they're coming over to director of marketing for this business, like that says something, right? One, they probably know what they're doing within a business at scale, right? Uber's huge, and they see it as such a good opportunity, they're willing to leave and probably get paid a lot less. So the founding team is important to me, and like where they came from, what their backgrounds are. But realistically, like it really just comes down to kind of valuation and my opinion of how big I think the company could be, which is completely subjective. Like, there's no real equation there. It's just kind of like, all right, if I'm getting in a business at a valuation of $5 million and they're selling a SaaS business, like they don't need a whole lot of like annual reoccurring, right, like ARR to make it worth $10 million. If they're doing $100,000 or $200,000 in ARR at a $5 million valuation, and they're growing at least over 0%, like they'll be worth, $10 million in a relatively short period of time. Now, whether they get disrupted or like can keep that up or grow to a point where they are an attractive candidate for an acquisition, that's, a whole other story. But in my head, if I can see that they could be worth, 2, 3, 10, 20x what they're worth, what I'm getting in at, then it's a worthwhile investment for me, right? Because if you invest, in deals like that, like for me, it's a lot like just a numbers game. Same with like trading stocks, right? It's like you stack the deck in your favor as much as you can, and then hopefully the return that you get over 100 deals will be positive. It's not like I'm looking to come in and hit 100x on every deal I do, right? It's like I'm just looking to invest in 100 deals and have one of them be a 100x or 200x kind of investment, and the rest can be break-even zeros or like base hits. So,
do you run calculations based off of like where you think it could go, or is a lot of that just like mental processing?
Yeah, it's really quick.
Okay.
It's not. Yeah, it's usually just really quick. Kind of calculations. Sometimes I'll look at competitors if they have any. So I'll ask around, or I'll look on Google, or, if there's some websites out there now, like AngelList, they'll post like kind of what businesses are, if they're private, because obviously private companies don't have as much information out there about them. But there are some places you can go to find competitors and what they're doing in terms of revenue, or if it's like a public company that does something somewhat similar, you can kind of figure out like, okay, this company is doing, $1 million, $2 million, $10 million in revenue a year. Is there a market? Is there that big of a market for another business to come in and disrupt and do something a little different? Yeah, maybe. And like, it's just kind of like, asymmetric returns. It's like betting that there's a possibility that it could be huge, and not obviously never a guarantee. So
let's say I have $10,000 just kind of sitting around. What would you recommend I do with that money? This is not financial advice.
Yeah, not financial advice.
Just ideas.
10 grand. It's funny. Like a lot of life, actually. It's like, there's nothing that you can really do that's a guarantee. So like the risk that you take is equal or somewhat proportionate to the reward that you get, right? So if you go, you could take that 10 grand if you want to make money today. Like if you wanted to first like turn that into something today, you can go to the casino.
Maybe get it back.
Yeah, maybe get back. You're probably gonna lose it.
Yeah, lose it all.
But yeah, if you're looking, for low, and again, it just depends on what you're going for, right? Because you could take that if you wanted to say like not lose that 10 grand, but maybe make a little bit of money. Like if your goal is capital preservation, you got to go get like a CD or a high yield savings account, right? Because then theoretically you're not going to lose the money. Yeah, inflation, whatever, but you maybe make, a few basis points in this day and age on that money, and you're going to have the 10 grand. You could always take a little more risk. There's probably a website out there that will give you, volatility adjusted returns on average for a lot of different asset classes. So that'd be a good place to look. But if you're looking long term, I think the traditional, long-term investing, kind of passive investing, buying index funds and diversification is kind of your best play.
Okay. Nothing really like getting the adrenaline going. Just going into some nice, smooth.
Yeah, if you don't want to lose your money, or have a greater than likelihood of losing your money, but a huge asymmetric like payoff, I think you look at assets that are, similar to angel investing, right? So it's, companies that, and this could be investing in any business that may be something you start yourself, right? If you have 10 grand, you could easily start a brand, a business, even with products, right? what is a Shopify site? I mean, it's free, right? For the most part, like for 2 weeks to
Yeah,
set it
3
up.
weeks
It's like
to
$30 a
yeah,
month,
it's
right?
cheap.
So you
It's
can
cheap.
pay for your Shopify site for a good chunk of time.
Good.
Or invest in, some angel deal. But yeah, I don't know if you want to like dive into anything specifics, but it's just you got to weigh what your goals and objectives are for the growth of capital versus the how much emphasis do you want to place on preservation and making sure you don't lose that money, because for the most part the higher likely the greater chance of your reward, the higher likelihood is that you're going to lose that money, or there's going to be higher volatility in your returns. And if that isn't the case, typically it's illegal, right? Like there's no sure bets usually. And so, yeah, then you have some sort of information that may or may not be legal, but yeah.
Have you ever done any illegal trading?
No, I haven't.
Insider info?
I haven't. I mean, I will say like I think you just hear things from people that isn't necessarily inside information, but they may be alluding to certain things. So even if like you're out to happy hour with somebody, right, and they're like, God, our company's doing great, or I just got a spot bonus or something like that, where they're like excited about it, and it would only like a company would only do that if they're doing well. Like that type of information is kind of a gray area, right? Like it's not like they're explicitly telling you like, hey, we're going to report better numbers this quarter, so you need to buy our stock. However, you can kind of ascertain that maybe the company is doing really well if they're spot bonusing someone, or giving them some raise that's well above cost of living, right? And so that's to my knowledge not necessarily insider information. However, I think even like recently we've seen the SEC kind of go after some people that have made like very insignificant amounts of money relatively for trading on insider information. So it's probably best to just not trade on any information that you get in writing for sure, right? If the information you get is like via an email that can be traced, definitely don't do it. If it's information that's definitely related to specific like numbers, then definitely don't do it. If it's information that you're just kind of picking up here and there, you're doing the analysis on what someone else is saying and they're not explicitly telling you, then you could probably get away with it. But another thing too is even sometimes you could know quarterly numbers for a company and you wouldn't be able to guess. You may not be able to guess correctly what the stock will do. So that's another thing too, is even if a company's gonna, exceed expectations by 10%, on their EPS or something like that, the stock may not go up. I mean, it could gap down. Just kind of depends on what the rest of the investing community is expecting for them to release for numbers. So sometimes it's actually not beneficial. It's probably more harmful. It's you could get in more trouble than it's worth sometimes, I would say. If you're trying to like get inside information on what the company is going to report, somebody that works there, maybe he's the the accountant that reports directly to the CFO and knows something. Even if you get the result, even if you get that number and you make a trade on it and it doesn't work out, you could probably still get dinged for it. So never really mess around with that.
You have, I don't know if I've ever seen you, but I've heard other people talk about it. You do some NFT horse racing.
That's
Would you
funny,
be able to
man.
share a little bit
Oh
on
my God.
how that even works and what that looks like?
So NFTs, yeah, I mean, it's relatively new to me as it is to everybody else, but I just know this guy who was telling me about this NFT project Zed Run, which essentially, you buy this NFT which represents a horse with specific attributes, and the cool thing about it for me was I wanted to learn about NFTs. Right now they're hot as shit. I mean, it's insane. I guess collectibles in general, right? So I wanted to learn about it, but I didn't want to buy just any like picture or JPEG. I was like, well, this cool, like it has utility. Like I can buy this NFT for whatever it was, and I can race it. You can like race it against other people's NFTs, and there are different like lineages and like breed types and like genders. Like the attributes of these are insane, and it's really cool because it's actually based on like, it's way over my head, right? But it's based on whatever kind of genetic algorithms exist within the world today. So it's based on like what, and this is again way over my head. I probably am butchering this, but the way that they breed these horses, which is another aspect of the game, is you can buy 2 NFTs if it's a female and a male horse and breed them to produce another NFT. Wow. And so there's like some sort of equation that gets calculated or whatever to produce this new NFT, which is another horse. And so anyway, they race, you race them, and the value of the NFT is kind of based on how well your horse does. If you have a male horse and he's a really good racer, you can sell him as a stud and like have people breed with that horse because they're expecting it to like be faster, and you can sell your horses. And so it's just a wild world. I think it was just a way for me to get into the game. But anyway, the reason I got into this particular project though is because this person that I know was like crushing it. Like he bought up a ton of these kind of higher level, we'll call them, horses, and was racing them. And if you get, the probability of the placement that they get in a race, which I believe there's 12 stalls, so you get 12 horses in a race. So over 1,000 races, your horse will have one of 5 different, statistically, will have one of 5 different kind of diagrams of how the placements the outcomes of each race will be. So, for example, you could have one of the best horses kind of in the game is one that is winning a huge percentage of the races in first place, because the payout goes first, second, third, right? And it's divided up amongst each 3. So you want to be first, obviously. And then there is, a kind of a bell curve one, which will be like, you're not really winning, you're not really losing, you're right in the middle. And then there's a couple other configurations just based on the historical races that have occurred in the horses that exist today. So anyway, he bought up a slew of these like high performing horses and was just crushing it, making thousands and thousands a day on just racing. And they've changed the rules to the game. So originally you could race your horse as many times as you wanted and in as many races as you wanted. So he would just like all day be racing his horses, and the win rate for that was huge. And so you just race them, and then of course you get your winnings in ETH, so like ETH, Ethereum. And so he was winning these in Ethereum, and Ethereum was going up at the time, so he was just money printing essentially. Yeah. And I knew it wasn't gonna be like that for me, right? I was buying like shit horses. I just wanted to try it out and see like, all right, if I wanted to throw 20 grand at a horse that is good, would it actually work, and blah blah blah. So, and you can, it's just crazy. I mean, you could focus on just breeding, where you're selling your offspring and that's your income. So there's a lot of aspects to it, but I just got into it. It's not anything serious. I don't think that, it'll be like any huge money maker for me, but it's kind of fun. Yeah, it's fun to learn.
It's crazy.
I think the NFT space is so interesting right now. Not necessarily because of like artwork, like kind of like the apes and shit that people are buying for millions of dollars, that it's just a picture of an ape. But like the NFT space, where as it relates to what the horses are, where you have something that can be, there's properties about it, there's attributes that can interact with another NFT in some way. So i.e. a horse race. So you have specific attributes of it, your NFT, and given whatever algorithms they have, like there's outcomes that can be derived from your interaction with another NFT, and you can sell it and you can breed it, you can spin off NFTs, and it's all wrapped up in this game, which I think is just super interesting. And I think there's a lot of applications for NFTs in general, so that's why I wanted to get into it.
Yeah, even NFTs, like you see some people use them for events, for connecting with people.
Yes.
It's kind of like an exclusive membership you can get. And it also benefits the person that's selling it on a continual basis.
Totally.
So there's an incentive for them to create it, and it's incentive for the person owning it to keep it.
Yes.
Type of thing, which is really cool.
I agree.
I'm pumped to see like where it goes in the future and what people can do with it.
Totally.
It's cool.
I 100% agree with you.
Yeah. Do you have any plans on creating NFTs, or is even the horse that you own, is that like the only NFT you own?
No, I've minted some NFTs myself that are just like photos, you know? So like I've minted NFTs because what like we've kind of talked about before is like I like to explore, I like to like learn about something, and the easiest way for me to do that is just kind of like see an application of it. So like see how does it act in a specific application and like learn more about it. So I was like, okay, well, if I have a photo, like how do I, what does it mean to mint an NFT? Like how does that happen? How long does it take? What's the cost? Is there a cost? What's the marketplace like? So just trying to figure all that out is just it's easier for me just to try it instead of like trying to read about it. It's just kind of like, let me go buy this fucking horse and throw it in a race and see what happens, And then you figure everything else out at the end. Or, let me just mint this NFT of a photo of me like in fucking Italy. And see what happens.
Ooh, how much is it selling for?
I don't know. I think I put it up for a penny. No one bought it.
Do you get that price way up there?
I know.
Might buy it.
Totally.
No, that's cool though. Yeah, I think just like being able to, just start doing something instead of reading too much about it. Like taking action on it is way better than just like sitting back and like reading and watching on it. It's actually like doing it helps.
And listen, like I have met a lot of people, or have met the type of person that needs to consume a lot of information before they act. And I think that if that's what works for you, that's great. If you need, some sort of like preparation, which I totally get, like preparing yourself, ingesting some sort of information, whether it be books or whatever about a topic before you jump in, that's great. For me, it's just been a little different. I like to get in the weeds a little bit and figure it out for myself. Similar like when I started out doing programming stuff. It's like, I could read all the books in the world. I just want to get in there and try it and like fuck up sometimes, right? And like figure out the hard lessons. So yeah, totally. I agree with you. But there are some people that I know, very intelligent people that like to prepare first in some way. Mm-hmm. So
kind of looking out into the future, maybe in like the next 5 years, what would you like to be doing?
Oh man, that's a tough question. 5 years from now? So I'd be 30. Yeah. In terms of career?
Yeah, just career, maybe what life kind of looks like for you. If you have any like ideas.
5 years. No, I think like I've always have been interested or welcomed the idea of having some sort of family. I don't particularly know what that setup would be. It's not like, I don't know if kids are so to me a family would be a significant other who I consider my person. I think the like marriage, kids, being part of a family doesn't necessarily have to be the case in my opinion. It definitely could be, and it's something that I want, but I think having someone that I'm, I guess, kind of like sharing life with is important to me. So that would be kind of the first thing on my mind. Potentially having some sort of kids or whatever.
Maybe an NFT. NFT baby.
NFT babies. Yeah, that would be fucking wild now that I think about it. Imagine that.
NFT family.
Dude, imagine that though. Like if you had, imagine this, just can we sidebar for a second?
Yeah.
Imagine this, dude. However many years from now, the U.S. government says, all right, everyone has their own NFT. It's unique to you. It holds your information about your eye color, your hair color, your social information, like all your bank account information, right? Like that's your NFT. You can use it to interact with different applications or people or whatever. And then they take it a step further and like say, all right, there's like this virtual world. So like you and someone else's NFT could produce like offspring that's its own NFT, right? Like it's not a human, but it's like a weird NFT offspring that has attributes.
That's cool.
I don't know.
That's fun to think about.
That'd be fucking weird.
I could see some like NFT and crypto combination there with the whole identification system.
Yeah, because then you could
and,
sell it.
Yeah, that'd be sweet.
Oh, what a life that would be. But okay, so yeah, back to original question. 5 years from now, so yeah, that would be nice. I always kind of liked living. So I love Minnesota. I grew up here. I always expect to have some sort of presence here. So whether it be like a condo in the North Loop or a house on Tonka or somewhere in Minnesota, I love spending time here. I still have family here. Lake life is great. Going up north is great. So I always think that I'll have some sort of presence here. But I would like to, and I kind of talked about doing this winter, but I don't know if it'll happen, but get a place in a warmer part of the country. So, Phoenix, Miami, Texas, some place that's a little bit more of an escape for the winters here. I wouldn't say I'd spend the entirety of winter away from here, but at least a few months out of the winter, go spend some time elsewhere would be ideal. But really just doing this in terms of career, just doing the same shit I'm doing now. I don't see that changing much. I have thought recently about, instead of, most of the startup deals that I've done now, bringing that back a little bit, most of the deals I've done now have been relatively hands off. The syndicate person is kind of doing the due diligence. They're looking at the businesses, they're negotiating, they're providing assistance or advisement when needed from the to the business that we're investing in. And it's just hands off for me. So I've really toyed with the idea of starting something of myself again. Something new, something more exciting, which I could see myself doing in the next year. I've thrown out a lot of ideas, and that could be I'm investing in a pre-existing business and then just providing some sort of expertise, whether it's technical or, sales or something, or management, or it could be something that I start entirely, myself. I've thrown out that wine idea, that winery. Have you heard that in the office?
I've heard of the concept of the winery, but
the vineyard idea. I've thrown this out. It's kind of been in my mind for a while, but buying a vineyard, I know it's a tough business, so that's kind of why I'm a little hesitant. It's not a business you come into and it's, easy money, but I think going the vineyard route is a little bit better, safer, I guess you could say, right? You're owning the acreage and you're producing the vines or the grapes, and I've seen a lot of these deals where you can buy the property and they still have pre-existing contracts with actual wineries that buy your grapes and produce their own wine. So it's kind of like a headless system where you just produce the grapes and sell them. More of like a farming setup, which I could get on board with pretty quick. And then the actual winery part where I'm building a brand around a specific type of wine and actually producing the wine itself, that could come later. But that's something that I've thought about. I love wine, so it's kind of like a good extension of that love of mine.
Yeah, that's cool. It's good to share.
Yeah.
Maybe yourself 5 years from now be like, oh.
Yeah, I kind of toyed around with if I'm looking to live somewhere warmer in the winters here, why not buy a vineyard in the South or California or something that's a place that I could go for a few months and help operate. And it would be kind of the best of both, be here in the summer and there in the winter and be able to work on the business all year round, but specifically in the winters. And yeah.
To kind of finish up the podcast, finish it up with a few questions here.
Rapid fire.
Yes, something like that. If you were to go camping out in the wilderness with 3 people, alive or dead, who would those 3 people be and why?
Alive or dead? Boy, camping in the wilderness. So I will say, first people that come to mind, I think So maybe like a Tim Ferriss, someone that is more of a kind of like a newer age, someone that's like within our generation that seems to have really good perspective on life, or at least is getting to some sort of place in his life. Just, I mean, I don't know the guy, but kind of following along with his journey, like has good perspective on life and what, you know, has focused on mental well-being, you know, performance, kind of finding some sort of balance in life. I think that would be cool to get someone like that's perspective and how they see like what's really valuable in life. And maybe, you know, even more so someone who has made a lot of more money. So like a Dan Bilzerian or something like that. Right. Because I've listened to some of his podcasts. Like, you see the guy and you kind of get this weird, you probably judge him right from the get, whether in a good way or a bad way. Right. But I think he some of the things he said just on podcasts that I've heard is like, you know, the kind of there's a money, like a hedonistic aspect to life. And like, I think in money in particular, you get to a certain point and you realize like that shit doesn't really matter. And so like, once you get to a certain level, I think, you start to focus on what really matters to be happy, or to like find fulfillment. And so I think, you know, it'd be cool to get, you know, that perspective as well. Like someone who's been super successful, who was maybe pursuing things that ultimately didn't make them happy, and kind of get their take on what, you know, how they course corrected. Like, what did they actually focus on? Like, how did they change up their life to find that fulfillment? Because you hear that a lot. Like people, you know, you focus on the money and you end up kind of empty. So, I think I would love just any inventor, you know, anyone who's like invented something really interesting. This could be technology related. It could be, I'm trying to think of a good example. I mean, like an Elon Musk, be interesting. Like, it doesn't even have to be someone who was successful at what they did, like in terms of invention. It'd just be like to hear someone talk about their vision on a future that doesn't exist, you know, like, or maybe is completely like out of this world, would be so interesting to me. Just like shooting ideas around about what the world could be. You know, what it would take to get there would be fun.
Mm-hmm. Yeah,
and I feel like if you're talking about like in the wilderness, right? So you're probably, you know, smoke a little weed. It'd be quite the trip to talk to an Elon Musk or something in that state, right?
Yeah, you'd have to have Joe Rogan out there, you know, to get it going.
Sure.
Sweet. And then if you were to leave your last piece of advice, maybe to your younger self who could have, you know, benefited or used it earlier in life, what would that be?
I think I would say emphasize relationships with friends, families, you know, whatever, over superficial things. So, you know, people over material things and experiences. I think, and I've always been, I feel like pretty good at that, but even early on, I think it's just so valuable not to focus on, you know, fucking money and just like, you know, material things. Like, great. I don't get me wrong, I love buying nice shit, but I think that for me, it's a nice benefit to doing something that I like to do, and not the reward for doing it, if that makes sense. Like, not the reward for doing something that I hate.
Yeah.
that sucks.
For sure. No, I love that. Like, try to balance everything out the best you can.
Yeah.
And try to be there for the people that need you most in life, and
totally
be there to experience life with them and support them. And
that's all that matters, man. Yeah. Honestly, you know, I've met a lot of people that, they'll lead with like, oh, I don't know, like an NHL hockey player. Like, okay, but are you cool? Like, are you fun? Like, do you have a sense of humor? Are you fun to talk to? Like, what are your interests? Like, do you have like shit that actually matters, right? It's not like, I don't care if you play professional hockey. I don't know, that's a bad example. It's not like I've ever had that happen, but you know what I mean?
That's not cool.
Yeah. But you know what I mean? Like, I think there's more aspects and more important aspects to a person, in my opinion, than what they do for a living or how much money they make. I think, I met a lot of people that are awesome and they love their fucking lives and they make, little to no money and they don't care. They don't have a lot of nice shit. That's not what's important to them. And I think that's awesome. And I met a lot of people that make a lot of money and that's cool too. And they also have an appreciation for just life in general, not just the things they own or the money they make. So that's cool.
Sweet. Well, Cole, it's been a pleasure having you on the podcast.
Man, thanks,
2 days. Had to split this up.
Thanks for having me. Time flies here.
It does. I just appreciate everything that you've done to like support entrepreneurs, even invest in them. I know you hopped into like 6th Florida Devon's like trading group to support them, which is awesome, and just like encouraging those young hustlers to get after it. So thank you.
Absolutely, dude. Pleasure. Thanks for having me.
Thank you for tuning into the podcast with Cole. If you enjoyed it, please send us a DM on Instagram at BehindTheVisionPod or ever_north, or leave us a review on Apple Podcasts, as we love to receive your feedback on the show. If you want to stay up to date on new podcasts and collection drops from Evernorth, check out evernorthco.com. Thanks again for listening, and I hope you have an amazing day.